Welcome back to the Medina podcast, ladies and gentlemen. It is your host, Chris Medina. And before we start today, I want to thank everyone who has come on the podcast to hear me out. Much love. Also, I want to just give a quick disclosure. I am not a financial advisor in any way. I am not a broker or do not work for a financial institution. And with that being said, let's jump right into it today, guys. Today I wanted to talk about how gold and silver will be king again. And the reason why I say this is because we're at a point in the cycle, in the economic cycle where, the Federal Reserve only has so much tricks that they can use anymore. I think Ray Dalio was on the news the other day, and he was talking about how the Federal Reserve only have two tricks left. One of them is keeping interest low. Keeping interest low and then raising them, which will not do very good for the economy, or just keep printing more money to bail out the economy. And, like I've said before, I already told people this. I'm like, hey, the Federal Reserve is not going to start, raising interest again. They said it on their last, what was it? When they went on the news the other day, they said it, they were like, hey, we're not going to raise interest. Inflation is being kept under 3%, and we're just going to keep it steady and see how everything goes. We will not be printing any more money right now. Congress is still in talks for the next stimulus round. Everything is on hold right now. And Ray Dalio said, they only have two tricks. Either they keep printing money or they raise interest. And they're not going to raise interest because obviously that's just going to cause a massive destruction in the stock market. What they want is they want to prop up the stock market. How they're going to do that is they're going to print money, give it to corporations and, bail them out. And they're going to report that on their balance sheets. They're going to report that on the quarterly earnings and say, hey, we're doing a lot better now because of the, because of the stimulus that the government is giving us. But the thing is, guys, this is not working. And the reason why this is not working is because, when the CARES Act was enacted in March, when Corona first came in, the government said, all right, we're going to give the people a round of stimulus, but we're also going to give corporations a round of stimulus, specifically like airlines. And, with the stimulus that we're going to give the airlines, they were hoping that, the airlines was going to take this money, use it to pay off any, operating costs, etc. And it has not worked. Airlines are still reporting that they're going to lay off massive amounts of people. I think also Ford said they were going to lay off 4,000 people. Coca-Cola said they were going to lay off another 4,000 people. MGM Resorts said they were going to lay off 18,000 people. This is crazy, guys. A Wall Street Journal article here. I want to read it to you guys. This was by Delta. It said carriers received $25 billion in government funds under the CARES Act, a broad stimulus package passed in March to help them keep their workers employed through the summer. But that money is due to run out at the end of this month, and negotiations for a new pandemic relief package that would include more assistance for airlines have stalled. Airlines have outlined plans to furlough tens of thousands of employees at the start of October, including over 1,900 Delta pilots. And what did they just say there? We're going to need more money. We're going to need more money within the next coming months, because right now we're going to lay off, tens of thousands of workers. We're going to lay off, hella pilots. And what is this going to do for the economy? It's going to continue to contract. And, what I've been saying to people is this. The economy is contracting, but it's going to continue to contract because that's just a, part of the cycle that we're in. There is no stopping it. People have run out of their savings. People have maxed out their credit cards. We're on thin ice right now. It's like I gave someone the example where it's like Jenga. If anyone has played Jenga, it's the game where you just put blocks and then you try to get to the top, and then once you get to the top, you start taking them out little by little until the whole thing just comes down. What I'm trying to tell people is this: we're at the part where it's like, once you take out this piece, the whole thing is going to crumble. We're sitting on $26 trillion of debt. The government is planning on printing more money to give to these corporations that are already dying. What are you going to do giving Delta another $25 billion? You're not going to get very far, because their balance sheet is already heavily loaded with debt. Their revenue has been cut by, probably 80%. And I don't hear no one telling me, hey, they're going to be a huge bounce back, in consumer behavior, in demand for travel within the next year. It's just not gonna happen. COVID is still at large. People are still fearful about traveling in such close quarters, and they're just not gonna go. I was in the airport the other day. It was completely empty. There was no one there on a summer day, which is crazy. It's usually packed, and I don't see consumer demand bouncing back anytime soon, guys. And what's that gonna do? It's just a complete contraction. The government's gonna print money out of thin air to give to these corporations that is not gonna help them in any way, shape, or form. This is what I've been trying to tell people. So what's this gonna cause? It's gonna cause a massive contraction. Like I've been predicting, these airlines are gonna continue to fold. They're not gonna bounce back out of nowhere. Like, hey, we've out of nowhere just increased our net income by like 100% or 200%. It's just not gonna happen. And they're not gonna be able to cover off their interest payments. They're not gonna be able to pay their principal down with the amount of money that they're getting, or with the amount of money that they're being loaned also. Because what good is it you being loaned money but not being able to do anything with it, because customers don't want to come to your business and shop. It's just that simple, and that's what's happening. There's signs all over about contraction. Like I said, all these massive layoffs, and it's just all of these massive layoffs are just adding and adding to the debt. This is just the big word here, is debt. We're gonna have a debt crisis within the next 2 years. Everyone is skeptical about this because we don't know how much we can handle. That's the thing. Obviously the government is very optimistic about this. It's like, hey, we can keep printing money and nothing is going to happen. Don't worry about it. We have everything under control. They went on, Federal Reserve went on air saying, hey, we're going to keep inflation under 2%. Everything's going to be okay. No. Hyperinflation still hasn't caught up to the first wave of inflation still hasn't caught up to us from all that massive printing of Corona, and they're gonna continue to do it. They're planning on raising unemployment again. They're planning on giving another stimulus. Obviously, like companies like Delta, the government is still gonna keep bailing them out, which is obviously idiotic. From their part. Like, why would you bail out companies that are already falling? Capitalism, guys, will always do its work. That's something. The more and more I research, the more and more I study, the more I understand that capitalism will always correct itself. And by correcting itself, I mean is if that you have a business model that's heavily leveraged. You're heavily leveraged. Consumer demand for your type of business is just very, very low. You're gonna fold. Hertz is trading at $1 a share right now, guys. $1 a share. A company that was very prominent within the last decade, owned by Ford, folded. Numerous airlines have folded. JCPenney has folded. GNC has filed for bankruptcy. Lord & Taylor folded. And these are very, very top-end companies, and they're still filing for bankruptcy. We're having a massive contraction, and it's going to keep happening, guys. I don't see it, getting any better anytime soon. Obviously, don't want to be the bearer of bad news, but that's just where we're at. Wall Street Journal article here said, more than 160 business leaders, including executives at Citigroup, MasterCard Inc., and NASDAQ Inc., have signed a letter to Mayor Bill de Blasio warning of New York City's deteriorating condition in the wake of the coronavirus pandemic and growing anxiety over public safety, cleanliness, and other quality of life issues. A lot of companies right now in New York City are getting hit. You go outside, trash everywhere in every single corner, because the sanitation department is, operating under budget right now, operating, at a very low efficiency of what they normally do, because people don't want to show up to those kind of works no more. People got laid off, 1. 2, people don't want to show up because they're scared of getting sick. Obviously, it's a pandemic. Cleanliness is a, must, and people just don't want to get it. So that's hurting the sanitation department. That's hurting, the government, because people are not getting taxed. They're not able to bring in revenue. A lot of these companies, obviously like Citigroup, had to lay off massive amounts of people, had to tell people to go back to work. And, it's just, like I said before, it's a domino effect. Once one company is hurt, it's going to hurt the other one, because one is relying on the other one. We're living in a service economy, which is a whole, conversation for another topic. But That's where we're at. The article continued to say the budget reduced or eliminated services like garbage pickups and graffiti removal, as well as shifted $1 billion in funding away from the New York Police Department. The city still faces a $9 billion deficit over the next 2 years and may have to lay off 22,000 government workers in the coming weeks. 22,000 guys, they're gonna be laid off, not because of social distancing, not because of someone is scared of getting sick, because of debt, because they're operating at a deficit. They're gonna continue to operate at a deficit. A lot of states already said, hey, we're not gonna give the extra $100. The federal government said they're gonna give $300. The state will give $100. A lot of states already signed up to say, hey, we're not going to give the extra $100. Why? Because we're broke. The states are broke, guys. They're operating at a deficit because they're not receiving taxation. That's their form of income. That and bonds. They give bonds out, which is they collect debt and in hopes of paying back the principal, 5 to 10 or 30 years down the line. And none of that has been working for them. So what is that going to do? It's going to continue to contract. The economy is going to continue to get worse for a while. And, like I've said before, it's a cycle. We operate at cycles. And right now, we're just at a cycle where there's just going to be a massive downturn. And cycles can last anywhere from 5 to 10 years, guys. But with that being said, I have said before that I do think this is the perfect breeding ground for precious metals. I do think this is the precious breeding ground for gold and silver mining stocks, also treasury inflation protected securities. This is what I believe, guys. If you go look at the statistics, like I've said before, gold and silver have been on a huge bull run. When the pandemic started, guys, silver was trading at its lowest in history. Silver has never been so cheap in the history of mankind. Like I was explaining to someone the other day, kings and queens went to war with other nations over gold and silver. People have died over this kind of stuff, and right now the average person has the right to go and purchase them at the lowest that they have ever been in the human race in history, period. When World War II, when the Civil War started, like back in 1850, gold and silver were trading like around $18. $18, guys. When the pandemic hit, I think I saw silver drop to like $12. It was dropping it was trading from $12 to $14. Well, 12 to 15. That was the trading range that it was in. Excuse me. But this is where we're at, guys. This is where we're at. And this is why I tell people, there's certain asset classes right now that are extremely undervalued. If you take the time to do your research, you're going to see an immense amount of opportunity in the midst of one of the worst contractions in the human race. And, I urge people, take a look, do your own research, because, times as we're seeing are not getting any better. The government sooner or later, when the economy continues to contract, we're going to see the Federal Reserve come on in and say, hey, we're back in business. We're going to continue quantitative easing. And we're going to see if this helps the economy out again. Because obviously, as we saw when they were being grilled by, the Senate, the chairman said, hey, we're at the mercy of the American public. Whatever they need, we'll give them. We'll supply it. We have no problem. We'll continue to be good kids and give them the money. No, that is not the right answer that the American public wants. What the American public wants is, how do we stop this contraction from getting worse without printing any money? But the thing is, like I said before when we started this podcast, was that they only have two tricks up their sleeves. One is printing more money, or raising interest rates to collect more money, on the principal, which they're not going to do that because there's going to be the contraction is going to get worse. The stock market will start to tumble, like Warren Buffett said. When interest rates are low, the stocks go up. When interest rates are high, stocks go down. So obviously they don't want to raise interest rates, but the second trick they have up their sleeve is quantitative easing, which is printing more money, guys, and that's what they're going to do. Like I said before, do your research on these asset classes. Pay attention to the contraction of the economy, because we have tougher times ahead. I remember seeing a show where, I think it was a guy, he told them, he was like, hey, Why did you come back? Why did you come back? He was like a year, well, like almost a decade gone without seeing his brother. He said last year we had the plague, and this year we have, financial hardships, and that's what's gonna happen. This year's the plague, next year's financial hardships, and like I said before, you know, death would come looking for you. Obviously, it's not the statement people want to hear, but death would come looking for you, and then it's like, all right, that's it, you're done. But obviously, when there's poverty going on, when there's financial hardships where people can't eat, people can't get a job, those situations in history have shown to be more worse than a plague. This is one of the reasons why Hitler came to power, why we've gone to war over oil, is just all over currency. We have seen more disasters out of money than we have out of plagues and just regular nature. So, I want to leave it at that for today, guys. Thank you for everyone that has come on the podcast. I have not been able to keep making podcasts like I normally do because I have been busy with my personal studies. I have not had the time or luxury that I usually do anymore. But, if anyone wants to watch the podcast on Anchor, Spotify, the link will be below. If anyone wants me to talk about anything, business related or finance related specifically, just, leave it in the comment section, guys. And to everyone that's coming on the podcast, thank you. Appreciate it. Much love. Till next time.